Today I'm going to talk about investment that I like a lot. Well, I don't really totally like it, but I think it's potential for you to invest in, okay? This is Beyond Meat. It's ticker symbol BYND. A lot of people like to compare this to Tesla as the next 10x investment, but the difference between Tesla and Beyond Meat, in my personal opinion, is that almost everyone who has a Tesla or has been around a Tesla or just seen it and experienced it love the experience. Whereas with Beyond Meat, I see that most people are not actually liking it. It's like they need lots of sauce, lots of something to complement it. Like they just don't like it alone or anything like that. And it's like they just can very much tell that it doesn't taste like meat. And the fact that Beyond Meat's burgers are healthier, but not that healthy, is kind of a concern because you're just getting something a little bit healthier, a little bit more environmentally friendly, but it tastes like so much worse. And that's what a lot of people don't like about Beyond Meat. And so that's kind of my concern. But then there's something better that I see with Beyond Meat than I see with a lot of other companies, is that I think when there's going to become more attention on plant-based meats and things like that, sorry about that noise, but when they have plant-based meats and things like that, I think Beyond Meat will actually be kind of not in sense like when a lot of people compare it to Tesla. What I see is that a lot of attention will go to Beyond Meat before all the other more volatile penny stocks, and so I think that's the benefit for Beyond Meat. Second benefit is that Beyond Meat has been kind of hit hard, especially with that McDonald's thing. They're trading at 32.1% below the estimate of its fair value based upon simply Wall Street. The earnings are forecasted to grow a massive amount, believe it or not, at like 68.81% per year. But something I also want to tell you is that right now a lot of people are just testing these plant-based meats, and they may not buy it a lot. Like it's probably going to be like the Popeyes chicken sandwich thing. They're just testing it out, and then it will go back and level down to like maybe 20% earnings growth or 10% earnings growth per year. So I think that's something to note. But I do love the CEO. I like, if you watch interviews on him, he has plenty of interviews you can go and watch. It seems really amazing. So this company has high growth potential, has a pretty good balance sheet, and it's undervalued, and it's like high growth, really, really high growth. So this company may be a little bit more volatile than some other companies, but I mean, the Very Good Food Company, you can say it's volatile, but all it has done really is just went up massive amounts. So the actual number for the fair value is $205.53. So that's the number you can look at. So this company is just, another thing is some characteristics of 100 baggers, 10 baggers, things like that. Well, the companies had high earnings growth, like they grew the earnings by massive amounts and revenues quarter over quarter and year over year. And it's something a lot of investors like, so I think that's another benefit. It's like growing all the time. So the historical annual earnings growth was 21.3% over the past 5 years. That's the historical earnings growth. Well, from 2017 to like 2021, basically. Well, we're coming to 2021. So Beyond Meat is currently unprofitable, but it has reduced losses over the past 5 years by a rate of 21.3% per year, which is amazing. It doesn't pay a dividend, so that kind of sucks for dividend investors. So of course the return on equity, return on assets, and return on capital employed is all negative. So just keep that in mind. It's not like there's really any earnings, but when we look at their financial position as far as short-term assets, short-term liabilities, and long-term assets and long-term liabilities, well, they cover it by a great amount. So that's really good. The debt to equity, well, the equity is so much higher than the debt. That's really good. The debt to equity ratio of 13.2%. That's pretty good. That's like satisfactory. Not amazing, but satisfactory. It's good. They don't have a dividend, like I said, but compared to the market, the bottom 25% of the market is a 1.4% dividend yield, and the industry average is 2.7%. So just keep that in mind. So Ethan Brown is the CEO, if you don't know. He's 48 years old, so fairly young, but kind of old. He's like right there, right at 50 years old, basically. There's a compensation at $8 million, which I don't like at all, especially how this company is right now. But when we look at the compensation versus the market, it's only a little bit above similar sized companies in the U.S. market. But I mean, compared to the earnings, that doesn't look good because Ethan Brown's, the CEO, compensation has increased whilst the company is unprofitable. And yeah, his name is Ethan Brown. I always forget his last name. So he has 2.49% ownership in the company, which is pretty good compared to a lot of companies. The management team is not considered experienced because they have a average tenure, I don't know if I'm pronouncing that right, of 1.6 years, and the average age is 50 years old, kind of old. The insider trading volume is just, we're seeing a lot of selling by individuals and some by companies in the last 3 months, 3 to 6 months, 6 to 9 months, and 9 to 12 months, which is not a good thing. Why would they be selling as the stock price or share price is going kind of down? So institutions love this company at owning 46.1%, which is amazing. Shareholders have not, this is a relatively new company to being public, and the shareholders have not been meaningfully diluted in the past year, which is good. The general public only owns 22.6% of the company. Individual insiders own less than 10% of the company, which I do not like. That's another reason why I'm not investing to this company. If I were to invest in this company, I would start a very pequeño small position. So the individual insiders own 7.1%. Private companies own almost as much as the public at 17.6%, and the rest, is between institutions, VCP firms, public companies, and as well as state or government. And so that's a little bit about it. So the name of this company is Beyond Meat, if you don't know. When you do think about plant-based meats, the first brand you think of is Beyond Meat for those people who probably are not stock investors, because then if you're a stock investor, you know about the very good food company, all those things. But the first thing you think about is Beyond Meat, because they have really good at brand awareness, which is something that I like. It seems like all these plant-based meat companies are good at that though, but Beyond Meat seems to go the extra step, which is amazing. This company is trading on the NASDAQ. It was founded in 2009. So this is a relatively new company to the public market, but it's not that it's not that young of a company when you look at when it was founded. The industry is packaged foods and meats. The sector is food, beverage, and tobacco. And by the way, if you watch some interviews with Ethan Brown, he literally states this company is a protein company. I made a mistake and said this was a meat company, and that is actually incorrect. It's actually a protein company. I watched that interview because he has so many interviews. I didn't get to all of them, and it said that he believes Beyond Meat is a protein company, and I guess that means when he's looking at growth, he's going to look at more things like that. The protein market is a big market, just keep that in mind. The market cap is almost as much as Dropbox at $8.748 billion. Shares outstanding above 60 million. Ticker symbol is BYND. I don't know if I mentioned that before. The employees has been growing as the company has been growing at a massive pace. This company is located in California, United States, so it's a USA company, which is gives you a better idea of understanding the company a little bit better, as it'll be a little bit more in the U.S. investors' circle of competence, which Warren Buffett likes a lot. So this is a really good company. So Beyond Meat just really is a food company, or a lot of people like to define it as a food company, but a protein company that manufactures, markets, and sells plant-based meat products in the United States and internationally. So they have the Beyond Meat. They operate under Beyond Meat, but they have the Beyond Burger, Beyond Beef, Beyond Sausage, Beyond Breakfast Sausage, Beyond Chicken, Beyond Fried Chicken, Beyond Meatball, and lots of other good things. So yeah. So the last thing I just want to mention is that I don't think that this is going to be at 100 bagger, or maybe not even a 10 bagger. This is possibly a company that can double in valuation in the next 3 years, but I really do not think of it as the next Tesla or the next 10x investment. And that is just kind of my analysis on Dropbox. But remember, I am not a financial advisor. And with that being said, let's go to the outro. And the last thing I want to say is I'm not a financial advisor, and nothing in this video is financial advice, but I do pick really good stocks very frequently. So thank you so much for watching, and make sure to subscribe for more videos, and also click those in-screen videos if you want more content. Thank you so much for watching. Follow me on Twitter, follow me on my Medium page, and also follow me on YouTube.